Hello and welcome to Business Today Television. I'm Siddharth Zarabi and you're watching Easynomics. The Reserve Bank of India in a 5-1 decision has held interest rates today, expected and on lines, but several new things in that policy. Before we begin this discussion with the Economist joining us on the panel, let's take a quick listen into what RBI Governor Shaktikanta had to say.
After a detailed assessment of the evolving macroeconomic and financial developments and the outlook, the Monetary Policy Committee, that is MPC, decided by a 5-1 majority to keep the policy rate unchanged at 6.5%.
Okay, we have Aditi Nayar, Chief Economist of ICRA, and DK Joshi, Chief Economist at CRISIL, joining us for the debate. Aditi, coming to you first. The key highlights according to you from today's MPC outcome.
Thanks, Siddharth. So see, first of all, I think what really stood out to me was a lot of bullishness on the growth front coming in from the RBI governor. And at the same time, on inflation, the view he has put forth is that we've done a lot, but there are still new risks which are coming up on the horizon. And I think the takeaway from me is a signal that rate cuts aren't starting anytime soon. So it's at least a few more policies before we get to see the first rate cut.
Okay, Mr. Joshi, coming to you with the same question, your key takeaways.
Well, I think the first one is that the economy is in pretty good shape, and it's a kind of a Goldilocks scenario where growth inflation mix is very good. I mean, growth is remaining at 7% and inflation coming down to 4.5% is an excellent scenario in today's global setting. This is not without its risk, though. I think the Red Sea conflict can destabilize this, and also I think monsoons can destabilize the inflation picture. So, but overall a good scenario. So in this scenario, when inflation is close to the upper band of RBI's target, I think they have no option but to remain a little hawkish and take steps to control inflation. So, as Aditi was saying, I think despite the budget also being non-inflationary in nature, despite that, I think the central bank is wary of cutting rates too soon or even changing the stance too soon before they have inflation aligned to their target of 4%.
Okay, Aditi, what explains the 5-1 decision? Earlier policies we saw unanimity. There's been a sort of different take from one member of the MPC who called for 0.25 bips cut. What could be the logic behind the ask for a cut?
So, when we read the minutes of the last couple of policy meetings, it did seem like some of the independent members were going to be moving to asking for rate cuts sooner than the RBI members, and that's what's happened over here. Views in terms of transmission and the time taken for transmission, the impact on inflation rates going ahead, and the impact of continued transmission on growth going ahead have differed across the different MPC members. And I think this is basically what has underpinned this non-unanimous decision this time, both on the rate and on the stance being kept unchanged. Possibly, obviously, these minutes that we get in 2 weeks will be quite important for us to understand the nuances of the decision to vote differently from the other 5 members. But possibly over the next couple of policies, we may find that 1 or 2 of the other external members also move more rapidly to wanting a change in the stance or a change in the rates before we finally get to a majority view on the same, which we expect will only happen toward the second half of this calendar year.
Okay, before we continue with the discussion, I want to pick up one of the key points that is outside the macro but is impacting the broader markets, and this is Paytm. The RBI spoke about Paytm, both the governor and the DG. Let's take a quick listen into what they had to say on Paytm. We'll do a quick stock check and also go across to my colleague Sakshi Batra for a quick snap before I come back to the Economist on the broader macro discussion.
Again, a matter of bilateral discussion, so I don't think that will be proper for us to discuss it in this forum. So as I said, discussing on individual entities will not be very proper, giving granular details in this matter. So we are seized of the issue, and as we take steps, we will keep the media and public certainly informed. Thank you.
You see, as the Deputy Governor has already commented, I mean, sufficient time, I'm again saying in a general sense, not specific to this case. We give sufficient time, we give sufficient time to every regulated entity, every entity that is supervised by the Reserve Bank to comply with the requirements, the regulatory requirements. We give sufficient time, and sometimes, as he pointed out, sometimes it may even look more than sufficient time. And we would not like to act, we are a responsible regulator, we are a responsible supervisor. If everything had been complied, I'm talking about in a general sense, why should we act? I mean, after all, we have a responsibility, it's a responsible institution, RBI, so that's how it is, yeah.
Okay, this was a brief digression, but Sakshi Batra, Paytm's been the big story and has massive second round, third round consequences as we are seeing on the ground. Explain how the stock has responded, not just over the recent past, but particularly after the RBI's statement today, and what lies ahead for the stock.
Very good afternoon to you, Siddharth. Yes, the governor did address the elephant in the room, Paytm, and that was definitely the need of the hour. The stock has slipped after RBI governor's statements. In fact, now is at the day's low, a 9.9% downtick. We opened at the highest point, 26 was the level at which we opened at. Remember, in the pre-opening trade, it was also showing another 10% upper circuit. It did not go up to that upper circuit. It always was about the 2 or 3% up when we opened at 915. At 526, right now the stock is trading at a 446 level at day's low. So this is definitely a reaction after the governor has said, and the governor has addressed 2 or 3 very important points when it comes to Paytm's Payments Bank. Even though they did not specify about Paytm not taking the name of Paytm, right, clearly this has been addressed. As far as that, it's only linked to Paytm's Payments Bank. The worry is not extended to the financial system. Yes.
Okay, a very quick take, Sakshi, before I let you go on the broader market's response to the policy on expected lines. The markets had digested what was expected and anticipated.
Absolutely, 0.5% lower on the Nifty right now, Siddharth, 21,808 on the Nifty right now. So most of it came in as per expectations, and which is why some of the profits been taken off the table. And of course, some market is disappointed over the fact that, there was no clear indication of what was the compliance issue that Paytm's Payments Bank had really. Several of them discussed, but no clear indication, and perhaps that is the clarity that markets were seeking from the governor.
Okay, thanks so much, Sakshi, for that brief interruption. And Aditi, I'm coming back to you and for the macro discussion. Thank you for bearing with us, because Paytm continues to be a story that will perhaps play out in the days and weeks ahead. But Aditi, what's your sense of the commentary from the RBI as far as inflation is concerned? The forecast remains unchanged, and for FY25, it's seen lower at 4.5%.
It's really interesting that even though there is such a large reduction in the CPI inflation, which the RBI, the MPC has continued to forecast between FY24 and FY25, there's still a lot of emphasis on being vigilant and on the risks which are emerging, including the monsoon and other geopolitical risks, etc. So I think the signal that at least we are taking away is that they want to really make it clear that this is not a fight that has been decisively won. We must keep our guard up, and we must continue to remain vigilant going ahead on inflation and not let the hard-won gains slip by in the event of any kind of perishable price shock or any change in geopolitics, etc.
Mr. Joshi, along with the inflation, the statement also makes it clear with regard to the stance What is your own reading? And we had this discussion earlier on expected lines again on that point.
Yeah, I think there was absolutely, I think, near unanimity amongst analysts and policy watchers that the stance is also going to remain as withdrawal of accommodation. I think the central bank has also pointed out that the transmission of their or rate hikes to the lending rates is not complete as yet. So I think in being consistent with that stance and also the need to control inflation in the economy, I think it was something I think that was completely anticipated by almost everyone.
With regard to the inflation forecast, Mr. Joshi, at 4.5%, is this something that you concur with? Because it kind of is may not take into account what could happen with the weather and consequent impact on food prices, for example.
Well, incidentally, I think our base forecast is also 4.5%. See, what has happened to inflation in 23-24? We have data till January, till December now. I think the interesting part is that it's the food inflation which is playing a spoil sport. The non-food inflation has actually come down quite sharply compared to the year before that. The food inflation is which is the one that has increased its contribution, and food inflation is a very volatile component, and there's absolutely no way to predict whether clearly at this juncture, and also I think to predict where the food inflation will go. So the base case scenarios are typically taken with a normal monsoon. I think that's how we work. And once if the assumption is violated, then you change your number. So I would say that this 4.5% is contingent on food inflation coming down, and that is contingent on monsoon. For monsoons, RBI has assumed that it will be normal.
Okay, Aditi, explain to our viewers the statement that need to navigate the last mile of disinflation. What is the RBI pointing towards?
Sure, Siddharth, and just before that, our forecasts for inflation for FY24 are a tad lower than the RBI at 5.3% instead of 5.4%. And for FY25, we are at 4.6% instead of 4.5%. So we're broadly right there with the MPC's forecast. Now, the statement that you mentioned, basically what they're trying to say is that, they've emphasized so much in the last few quarters on the inflation target being 4% and not just below 6%. And I think that's what they are kind of trying to remind the market, that 4.5% average inflation for FY25 is fine, but the eye is still on the target of getting to 4% in a sustainable manner.
Mr. Joshi, when it comes to the growth forecast, third year above 7%, anything different that you heard from the central bank when it comes to growth?
No, I think, we are a little lower than 7% for the coming year. But I think one interesting thing that the governor pointed out was that the global growth is stable, and I think everybody is now factoring in growth which is slightly higher than what was expected maybe a quarter back. I think even for the US economy, the recent indications are that the economy is quite strong, and even in 24 it will remain quite strong. So I think that the drift, that negative drift that comes from global slowdown, I think that has reduced. So that's number one. And then I think on top of that, the risks of weather which played out in 23-24 and which will also to some extent flow in the next fiscal year, I think they're seeing the risk to rabi crops not that high. I mean right now, so which means that agriculture will also will do better than what was initially expected. So I think agriculture being a little more supportive, and particularly for next year, because the base will be low of 23-24, and if monsoons are normal, you'll get good growth in agriculture as well. And I think the other thing RBI governor alluded to was that the recent indicators, the high frequency data, particularly particularly the PMI in services, I think that is above 60, very, very strong expansion zone. And even for manufacturing, it is in a very healthy expansion zone. This is much, much better than the global PMIs that we see for manufacturing and services. So India is in a way, even on a high frequency data basis, is doing much better than most. So clearly, I think expecting, so that is what is behind their expectation of 7%. Now there are risks floating around, but I think that's not the base case that these risks will play out.
Aditi, in terms of the risks from the global situation, do you think much of it is now completely behind us? The oil shock, supply shock that was feared on account of what was happening in the Red Sea, even that seems to have abated. So a very benign external environment that the policymakers had to contend with currently.
Well, my view is that as far as crude is concerned, whenever there are short-term disruptions in demand or in supply, whether related to weather issues or related to geopolitical conflicts, as an economy, we have to be prepared for crude to temporarily spike to the range of $90 to $100 per barrel. But the global demand is really not going to support this in a sustained manner. So what we keep seeing is spikes to those levels, and then it kind of recedes back around that $80 per barrel mark. Over the last few quarters, what we've seen is that seems to be more where the market is clearing. That seems to be an equilibrium point. So yes, right now at least we are in that sort of safe zone of $80 per barrel. But I think looking ahead, I mean, there's still a lot of geopolitics which is playing out, and chances of a black swan event certainly can't be ruled out. So I think caution, the way that we've seen the RBI governor expressing today, that's certainly one.
Okay, Mr. Joshi, I come to one of the other crucial issues, which was the expectation around liquidity, and we've seen private bank stocks falling on account of getting no relief as far as the liquidity situation is concerned. And just to remind you viewers of what the governor said, the quote on this included that depending on the situation, we will use appropriate liquidity tools. Liquidity situation is fluctuating due to various factors, and markets and banks take time to adjust to the evolving liquidity situation. Mr. Joshi, on the liquidity side, again, as per your expectations, that the RBI says that we will continue to watch the current situation?
Yeah, I think, but they'll do that, and I think they have also mentioned that in the last 2-3 policies also that they'll remain nimble. I think so. As per the situation emerges, I think they'll react. Sometimes they'll infuse, sometimes they'll pull out. But my general impression is that the tilt will be towards keeping the liquidity tight, because without that, I think the transmission doesn't improve.
Okay, Aditi, will this change in April?
Yes, I think it will. As we move into the easier season for credit, I do think that the liquidity situation will ease out a little bit, which is another reason why the RBI may not want to take any more permanent measure right now. We are not expecting anything on the CRR, for example, in the next couple of months, because the situation should ease out quite significantly come April.
Okay, Mr. Joshi, broader point, and not expecting you to speak on the stock, but a lot of questions in the post-policy conference were focused on fintech, on Paytm. What's your sense? The RBI brass defending what the market see as extremely strong action, and basically going beyond just one company and holding out a red flag to the entire fintech system that you can't walk far too ahead of regulation, and as and when you do that, as far as compliance is concerned, we'll come and catch you.
See, my generic answer to that would be that I think if you remember, RBI had also introduced macroprudential norms when the credit was growing very fast in unsecured and in credit cards. I think so whenever they see a problem erupting due to any reason, I think they act proactively. I think so this is a part of that. So I would see it as a part of central bank trying to reduce instability in the system by acting proactively.
Aditi, do you see a broader pattern that after previous measures, including on unsecured credit, now the RBI is looking towards the fintech system where there is a lot of innovation, but many times some parts of that innovation are far ahead of the existing regulatory framework?
Well, I think the regulator is doing its job, making sure that regulations are keeping up with an evolving landscape.
Okay, that's a pretty short answer given the issue, because this has dominated a lot of the post policy conversation. One more point, Mr. Joshi, again this is banking and not macro. This is to go beyond just OTP and a new kind of mechanism to authenticate transactions. Again, part of what the RBI is doing to facilitate security in a increasingly online payment, digital payments economy.
No, absolutely. I think I would say that our central bank has been way ahead of many other central banks, and I think they had introduced two-factor authentication much before that. I think so it has helped. But I think, as Aditi was also pointing out, the things are evolving very fast, and I think you need to make at least online, because digitalization has processed at such a fast pace. It's actually years have happened in months. I mean, in that after the COVID struck. So you need to be, I think, making it more and more safe for the end consumer. And we keep hearing news of people being cheated. I think of being defrauded through online system. So you need to make it more and more secure. I mean, that's an ongoing issue that will continue to be addressed.
All right, Aditi Nayar, Mr. Joshi, thank you very much for joining us on the post policy debrief of what was done. Viewers, very clearly, completely on expected lines, no surprise there, and the major reaction has been in the Paytm stock, because a lot of the post policy conference also focused on the explanation behind what has happened to Paytm. But for now, holding rates unchanged for the sixth time. One member of the MPC calling for a cut, but that is perhaps still some more meetings away. Thank you very much for tuning in. We'll be back with more. Until then, goodbye.